Hi friends, today I am going to discuss about Lakshmi Vilas Bank. Shareholders of Lakshmi Vilas Bank removed 7 directors from the company in the last week. But why? Shareholders removing management of the company is really bad news. That means shareholders have no trust in the management. Let's see the reasons. Let's look at brief history of Lakshmi Vilas Bank. Lakshmi Vilas Bank was started in the year 1926 by 7 people from Tamil Nadu. They started their business in order to give loan to the small business. It was started under the leadership of Sri V.S. and Ramalinga. In the year 1958, Lakshmi Vilas Bank received a banking license. In the year 1970, Lakshmi Vilas Bank became pan-India presence. They made their presence in entire India, which is really good. Last decade, some turnaround happened in Lakshmi Vilas Bank. To increase revenue and profitability, Lakshmi Vilas Bank started giving loans to big corporates. What will happen if we give loans to big corporates? Think of this way. If you give 10 lakhs worth rupees of loan to people, you will get 10 lakhs worth interest return. If you give 1 crore or 10 crore worth of money to the people, what will get? You will get in return 10 crore worth interest. So, banks will get profit by giving loans, big number of loans as many as possible. So, in order to increase profitability, Lakshmi Vilas Bank started giving big amount of loans to large corporates to increase its revenue and profitability. This move was made to increase revenue and profitability of Lakshmi Vilas Bank. Between the year 2010 and 2017, Lakshmi Vilas Bank loan book grew by 4 times. Loan book grew by 4 times is really good sign. If the loan book of a bank increases, the revenue and profitability of bank definitely increases, because the higher amount of loan they give, the higher amount of interest they will get as a return. Banks will get profit by giving as many loans as possible. So this is a really good sign. So what happened? What actually made downfall of Lakshmi Vilas Bank? Lakshmi Vilas Bank has loaned out close to rupees 5,000 crore rupees to companies in the textiles, infra and metal space. But giving good, they will get good amount of return. But not all companies will can return interest, can repay loan. Some companies will struggle. That was the turn down for Lakshmi Vilas Bank. Some companies which Lakshmi Vilas Bank gave loans, they struggle to repay interest. Soon enough, unpaid loans began to pile up. In the year March 2018, company reported a loss of rupees 650 crore rupees. You may think 650 crore rupees is negligible, that's not a big loss. But you have to note this point. Company had made only few crores of profit, that too during the best of its time. Bad loans started to pile up, company was making continuous losses. So in order to overcome this loss, Lakshmi Vilas Bank is looking for investors, but nobody was willing to invest in this company. Lakshmi Vilas Bank was looking as many opportunities as possible in order to have some money, some capital. Lakshmi Vilas Bank tried to merge with India Bulls Housing Finance. Everyone was happy and expected that this merge will bring Lakshmi Vilas Bank back into its original phase. But bad news is Central Bank refused this merging of Lakshmi Vilas Bank with India Bull Housing Finance. You can see in this graph, in the Q4 FY18, the Lakshmi Vilas Bank has made a loss of 602 crore rupees. In Q1 FY19, it had made loss of 102 crore rupees. In Q2 FY19, it had made loss of 103 crore rupees. In Q3 FY19, it had made loss of 380 crore rupees. In Q4 FY19, it had made loss of 280 crore rupees. In Q1 FY20, loss of 230 crores. In Q2 FY20, loss of 360 crores. In Q3 FY20, loss of 340 crores. In Q4 FY20, it had made profit of 90 crores. However, in Q1 FY20, it had made loss of 110 crores. Moreover, Reserve Bank of India placed LVB, Lakshmi Vilas Bank, in PCA. What is PCA? PCA stands for Prompt Corrective Action. PCA means restrictions on things like lending and management salaries. It is a move taken for the bank to preserve capital. Those banks whose net greater than 20% and CRAR, capital adequacy ratio, the ratio which says bank's capital to its risk is less than 10%, return of assets is less than 0.25%, those banks were kept under this PCA. Under this PCA, the banks will have restrictions on management compensation and hiring staff, and they can't issue new loans to companies that are in sensitive sectors. And it will also have a restriction on distributing dividend to its shareholders. In this PCA move, if the bank can build adequate reserves, banks can walk out of the PCA and resume business. When done right, PCA can help prevent banks from going bust. However, short-term impacts of PCA will be little painful because only few loans will go out of the bank. Few loans will be given, so only few interest, some little interest amount they will get. This is one phase of Lakshmi Vilas Bank. The other phase is Lakshmi Vilas Bank involved in controversy with Religare Finvest. Religare Finvest is a financial services company. Religare placed Rs 750 crores in 4 fixed deposits in Lakshmi Vilas Bank. However, 6 months later, the bank had moved the money to its current account from fixed deposits and debited Rs 723 crores sometimes during this period. When Religare Finvest asked why the money from fixed deposits has been moved to current account and why Lakshmi Vilas Bank has debited 723 crores, Lakshmi Vilas Bank had a strange explanation. Lakshmi Vilas Bank argued that Religare's group companies had borrowed money from this bank and hadn't repaid the loan in full. So they simply used the money from fixed deposit to recover the money. Religare got angry. Religare said they never kept fixed deposit money as collateral. Collateral means some asset placed as a security for repayment of loan. For example, if you take loan from a bank by keeping your house as an asset, your house is an asset, you are getting loan from the bank by keeping your house as a security. Here house acts as a collateral. Religare accused Lakshmi Vilas Bank for siphoning funds. Religare filed a case to Lakshmi Vilas Bank, and the Lakshmi Vilas Bank was forced to set aside Rs 200 crores if the court ruled against them in the matter. This is why shareholders decided to remove the directors. Anyway, you are putting your hard-earned money, you are investing in your hard-earned money in a share market. Before investing in a share market company, I request you to do some at least basic research. By searching by finding out some basic research, you will come to know basic details about the company. Without basic details, you should not invest based on the advice given by stock gurus or some your neighbors or any financial experts. Before investing in a company, knowing management of the company is very, very important, because a good management will give good result for the company, and he will be very honest, I say. In order to know if a management is good or bad, I will give you a simple trick. Just go to Google and whatever company you want to invest, just type the company name space fraud. For example, if you want to invest in Lakshmi Vilas Bank, just type in Google Lakshmi Vilas Bank fraud or Lakshmi Vilas Bank court case. You will find if that management was involved in any case or fraud, then you should not invest your hard-earned money. A good management is needed for a good company. Thank you very much for watching this video. I hope this is useful to you. Thank you. See you again.